All right. Well, thank you very much for joining. We have a very large attendance at this webinar this afternoon. The topic is PPP Loan Forgiveness. And as you saw, first, I'm Kevin Hilton, the CEO of Impact, but as you saw in our invitation, the Engineering News Record reports the questions and confusion remain on the PPP program, which should come as no big surprise to anybody, or you probably wouldn't be on this webcast. We're here to answer some of those questions and clear up any confusion you have today. But before we get into that, we're have with us the General President of the Ironworkers, Eric Dean, who asked for a few minutes to address our audience today on the situation we're in and what he sees coming forward. So Eric, I'll throw it to you.
Thanks, Kevin. On behalf of the general officers, the trustees of Impact, we're happy to have another one of these webinars to help guide the contractors. I truly believe our Impact is the true definition of labor management. We do things oftentimes that benefit labor only, employers only, and sometimes labor and management. In this case, we have unprecedented issues as far as work goes, and I wanted to thank all the employers that are on the call just for keeping our ironworkers and your employees working and doing what you can for the economy. We have approximately 70% of our ironworkers throughout the United States and Canada working at this time based on the data that's coming in. General Treasurer's looking at trust hours as they come in, and so I'm thankful for the 70% are still working. That means the employers have kept the lights on, kept ironworkers' families fed, and I'm sure it's at a cost. I know it's at a cost of productivity. I know the jobs are not flowing as fast. I know with the extra safety protocols built in, you probably didn't bid them that way. And these type of funds hopefully provide you the relief. So I'm thankful for that we're able to put this webinar on. I hope you take advantage of it. For those of you who are successful in getting the PPP, that's the first step. Now the next step is turning it into a grant and getting your loan forgiven. And that's I believe there's no greater thing that we can do to keep people in the United States working. And the federal government believes so, and support of small businesses like yourself. So keep everyone safe. I appreciate what you're doing. Any labor leaders that are on, I thank you for your leadership. And I don't want to get in the way of the subject matter expertise that's occurring. So Kevin, with that, I'm going to put myself on mute, and I'm going to learn as much as I can about this so I can offer assistance as I talk to other employers.
All right, thank you very much, Eric. As we've had in the past, today again we have Matt Lesko. Matt is president of Lesko and Walterman, a firm specializing in accounting for small businesses. If he's not a subject matter expert, I'd like to know what adjective applies to him relative to these programs. You've seen him before if you've tuned into our previous webcasts and just gotten tremendous response. And I'm very you, Matt, and Pat Carroll, who joined you in previous webinars, for giving us guidance. You have guided many ironworker local union training centers and employers to be able to get the much needed resources they need to keep their doors open. So thank you for that. As we get into this, just like we've done in previous webinars and webcasts, down at the middle bottom of your screen, you have a Q&A button. Now, some of you, when you registered, provided questions that you asked us to answer. Matt has reviewed those questions, and they'll be answered throughout the process of this webinar. But if you have questions that come on the fly, click on the Q&A button. We won't be monitoring the chat, but the Q&A button I will be, and we'll get to as many of those questions as we possibly can, because a lot of the great information that we impart here come from those questions and the answers that are supplied. A recording of this webinar and the PowerPoint that goes along with it and previous webinars and previous PowerPoints are found on our webpage at impact-net.org, right on the front page. You can't miss it. All you have to do is click the ones that you want, click on it, and it'll play, or you can get the necessary and requisite PowerPoints or other guiding documents that we've got there. You have a 24/7 resource here in me, Kevin Hilton, and our capable impact staff. You contractors and local union leadership or international leadership that are on the line, you realize you can contact your regional director. Everybody on this call has an impact regional director. You can go into the website and search yours down. We've got a map on the website that will tell you who your guy is, and they are available and willing to answer any of all your questions relative to impact and what we're presenting today. And we also realize that you might get off this webinar and you might watch it again or whatever, or even have your questions answered, but other issues will come up later. So we created a special email address, and it is CAREACT, CAREACT @impact-net.org. Merely email that. It will come to our head business person, Carrie Walters, here at Impact. And whether it's a legal question, an accounting question, a finance question, bonding, anything of that nature, insurance, shoot that question to careact@impact-net.org. And if it's going to go to Matt, it goes to Matt or one of our other subject matter experts. And with that, Matt, the floor is yours. So please take it from here. Thank you.
Thank you very much, Kevin, and Eric. Thank you. It's a pleasure to be back. We really appreciate being able to support the iron workers, and just want to continue giving information that's most relative. I am going to present a PowerPoint, but I want to do a little introduction here. Just as we talked about in the very beginning, the first webinar, things are just changing so fast, daily, hourly, that the information I'm provide is the best that I have at this time. But I can tell you that things continue to change. I'm going to give you two examples right now. On the 23rd of April last week, a guidance came out that was talking about deeming who was necessary, the PPP. Were you did you have necessity to actually apply for it? And you may have seen the news about Shake Shack and some of the larger restaurants that were backed by private equity, and them giving back the money. And there's been a big hoopla about whether or not the small business community, what really created that quote necessary term. And then just 2 days ago, new guidelines came about. What if you furloughed somebody and then you got the PPP money, you offered them a job and they said, I'd rather stay on unemployment because there's actually more money. And the SBA gave guidelines that wouldn't create a reduction in the loan forgiveness. So these changes are happening frequently, and the guidelines will continue to come out. So I like to mention that just because I only have the information that I have. So let me just go ahead and share the PowerPoint. Real quick before I do that, I'm not going to go into the extreme detail that is the PowerPoint. I always believe that the most important part of these webinars is to do the live Q&A and really answer questions that are most important to you. So I'm going to try to get through the PowerPoint pretty quickly. As Kevin mentioned, it is available for download. It's very detailed and has some good information. I also have a spreadsheet that we developed here at Lesko & Walterman and the family of companies that help track the forgiveness dollars, as well as any reduction in the loan forgiveness process. The information that I provide, I didn't all come up with by myself. I took it from different resources. I didn't notate all of those different resources, but I like to mention that as well. There's a lot of great information out there. So let me go ahead and share this. So as Kevin mentioned, I'm CEO of Lesko & Walterman, provide outsourced accounting, but I'm also part of the executive group of Overture Group, which makes up the three entities that come up with a full financial services. So we really work with business owners on these and similar topics. Let me get right into it. So what is eligible for loan forgiveness? you remember when you did the application, you came up with your payroll costs, you multiply it by 2.5. That was just a factor of the actual calculation. But then there's other guidelines of saying what is forgivable, and that is those payroll costs that you use for the calculation, but also rent, utilities, and interest on mortgages are also deemed forgivable. Now there's a minimum of 75% of the loan has to be associated with payroll costs, but the other 25% can be associated to these non-payroll expenses. A little bit more detail here in this slide for when you want to review it in more detail. The key components of forgiveness has to deal with that coverage period. All the guidelines right now are talking about that coverage period or that forgiveness period of being that 8 weeks from the day that you receive the funds. Now, interestingly enough, there's a lot of lobbying going on right now. AICPA is leading the charge to change that to a different period because they want to align it with when companies are reopened, which I think makes a lot of sense. And I hope that this guideline changes to what the AICPA is asking. And if you can imagine this, if you're a business and you've been shut down, bringing on people right now doesn't make a lot of sense. That may not be as impactful here, but I'm sure there are some companies that had to let go of a lot of their staff, and it'd be better to have that 8-week period be when they are able to reestablish operations. There's this big question, and the guidelines are still not there, whether it's on a cash or accrual basis. And I don't want to get into the nitty-gritty of it, but we're taking a viewpoint that is cash basis. And what that means is that you're counting your expenses based on the date that they left your bank account, as opposed to the incurred period, like your pay period. However, that could change. And the reason this is that payments made speak to a cash basis, costs incurred speak to a accrual basis, and this goes to additional gray parts of this legislation. What is the loan forgiveness process? And looking at the questions that came from the attendees prior to this, one of those questions is how do you apply for it? And actually, this is a major question that is out there currently. Now, what I can tell you is that you're going to apply to through your bank, and my guess is that each bank's have a slightly different process. But the loan forgiveness process first goes and says, use those PPP loan proceeds for payroll, mortgage interest, rent, and so forth. Maintain your head count. So, you have a look back period. It says, what are your full-time equivalent employees? And are you maintaining that in that 8-week period? Are you maintaining wages? Are you not reducing any wages under or over 25% reduction? And that does not count for any staff that are making over 100,000 because it has a limitation of that 100,000. And it wants you to restore, if you've laid off people and then you got the PP, it wants you to restore that head count during that 8-week period. The issue with the guidelines and not having them is that if you got the PPP, you probably need to bring those people back now, or understand that there's going to be a portion that needs to be paid back, because if you don't bring them back, if you don't bring that FTE headcount, if you don't restore it, you will have a reduction in the loan forgiveness, or how much of that loan can actually be turned into a grant. I sort of jumped the gun and started talking about how to apply. You are going to submit to the lender your application. I assume each lender is going to provide and I use the word assume, we don't have the guidelines here, but I assume that each lender is going to provide a forgiveness request form or application. And then they're going to request a set of documents. Now, for those that applied for the PPP, you probably saw that different banks require different things from talking to your colleagues and so forth. It wouldn't surprise me if some of the same thing happens within the documentation that's required by the lenders. Now, what I provided here is a list of documentation that seems obvious and required no matter what. So, they want you to prove that the money was spent in the appropriate way. They want you to prove that you paid your staff, that you had the head count, that you paid the rent, it was going in the right period, and so forth. And then they want you to certify it. I talked about this slightly in the beginning of this, but with the guidelines that talked about whether the PPP loans were necessary for certain businesses, the guidelines also said that they were going to make it criminally liable. And so that's where that certification comes in. Again, I believe that any closely held small business that doesn't have the cash reserves, forget the credit facility and everything else, the cash reserves to maintain for a 3-month period, qualifies for a loan like this, because the whole idea is to keep the core of the economy sound, and the small business community makes the core of the economy, in my opinion. The lender will issue the decision within a 60-day period, and the amount forgiven is excluded from gross income. So the forgiven amount is not income to the business, but there is a component here that has a lot of people asking the question. That forgiveness is covering a portion of costs of expenses, and those costs are typically deductible for a business. However, when the government gives you a grant, and this goes into what we call fund accounting and in the nonprofit world a lot of times, but when the government gives you a grant or credits, they're not going to allow you to take those as actually deductions for your tax purpose. So understand that from a loan forgiveness perspective, that you're not going to be able to take those expenses and deduct them for tax purposes. And that makes complete sense to the normal IRS code of how that is maintained.
Matt, let me interrupt you. You know, you say the lender must issue a decision. Is there an appeal process, or have they even gotten to that level of granularity, or what?
I have not seen anything about that. Doesn't mean there isn't out there, but I have not seen anything about an appeal process. I would say the fact that nobody's received funds and gotten through that 8-week period is probably why we haven't heard about it yet. And I want to talk a little bit. I talked about fund accounting just now, and it's probably it's probably terminology that's not widely used in this industry. But think of it like job costing. When it comes to maintaining the records for your PPP, think about it like job costing, in which in your accounting system, you want to have a section in which you're tracking all the costs of the PPP into a place where you can run basically a profit and loss of the PPP expenses. And then once you get it forgiven, you would basically convert the loan to income into that job, so that when you go to tax time, you have a segregated financial statement for the PPP stuff. I know that gets a little bit technical, and we're happy to answer questions around that. You can use the CARES Act at impact-net.org, and I'll be happy to go into more detail. I don't want to get too into the weeds here in this conversation, but when I talk about fund accounting, think of it like job costing, which is going to be a lot more familiar. What are the key points? Understand what qualifies. Make sure that you're on top, you're taking the action right away of documenting and keeping up the records. Don't be scrambling at the end of this to try to figure it out. We expect further guidance from the SBA, but think about it from the intent, and I talk about this internally a lot. Look at what they put out there and think about what the intent of the CARES Act was, and try to maintain to the best of your ability that way. All payments of principal, interest, and fees and loans deferred for at least 6 months, which means that you don't have to start paying back the PPP even if you don't have full forgiveness for 6 months, and it's a 1% loan. So don't get scared that you have to pay this back. Just be smart that you don't spend it and can't pay it back. And then forgiveness can be reduced by both your head count and your compensation numbers. And then the big part is, if an employee is laid off, you offered them their job back, and they declined it, that needs to be documented. A letter needs to be signed by them, but that will not reduce your PPP forgiveness, which is a big component, because a lot of employers that were letting go minimum wage or slightly above minimum wage employees, they're getting a lot more money on unemployment right now than they would coming back to the job.
When you say use a proactive approach to documenting, that sounds incredibly important to me.
Yes.
Can you recommend the best method and what official documents you need? I know you listed them previously, but I think this certainly bears some emphasis.
Yes. So I have a list of the documents here. Later on, I have some additional information on this. I will also show a spreadsheet workbook that I created. I actually took 3 different spreadsheets developed by different organizations and married them together for a tracking plus reduction component, tracking component. So yes, I believe, I'll just run here. Yeah, this list here that I have, the documentation verifying, payroll tax filings, state income tax, that's your list of documentation I would do, but it's also going back to that job costing component. And so we'll talk a little bit more about that. But it's going to be document, document, document. And we said it before, we said, what are the 3 things to do? Apply, apply, apply. Well, now afterwards, it's document, document, document. We hit here. This is more of a graphical representation of what I've already gone over. So I'm not going to dig deep into this right here, but I find that different people process information different ways. So in the PowerPoint that I was going to provide, I wanted to do it from a bullet point perspective, but then also from more of a graphical perspective. So this talks about calculating the forgivable expenses, showing the bucket, the 75% for payroll costs and 25% in non-payroll costs. How that flows into determining your FTE differential, and sort of shows a workflow on how you can get there. And again, I'm not going to dig into this right now. Everybody can get this from us afterwards and look at this and then ask questions. Determining your salary differential and making sure that you don't have a reduction in forgiveness there. And that's really the workflow of what you're dealing with and maintaining the documentation, as well as understanding what you're going to get out of the PPP in the long run. And then that restoration test, are the FTE head counts and salary and wages levels for any decrease made between yes or no? What are we dealing with? And the spreadsheet I have helps walk through this very workflow. What are the loan forgiveness best practices? And this goes into the document. We are recommending that you set up a separate bank account. If you receive the money into an operating account, I would take that money and I would open up a secondary checking or savings account, and I would transfer that money. And then on a weekly or other cadence that is consistent, I would transfer money based on the expenses incurred. Now, how can I do this easily? Well, if I talk about that job costing, and if I'm allocating expenses that are appropriate to that job cost, and I run that report each week, I transfer that money. I have the backup documentation of why I transferred it, and so forth. And you'd also use the spreadsheet that I have. I prefer doing it within the accounting software. Sometimes the accounting software is not set up in a way to do that well. And that's why I developed the spreadsheet. When paying a covered mortgage payment, write separate checks for interest and principal. This is being touted out there as something to do. I personally believe that that's overkill, just from a reasonable operation standpoint. But transfer that qualified payroll cost to the operating account is what I was talking about, on having a separate account and then transferring it, showing why you're moving that money. Not to go too far into going back to the fund accounting, but in the world of nonprofits, when we receive a grant, a lot of times it's called restricted. Restricted means we can't use it until we've incurred the expense, and we put it in a separate bank account. And then on a monthly period, typically in this scenario, we look at all the costs incurred to that grant, and then we transfer from that, and then we're allowed to make it unrestricted. Same concept here. Provide the documentation that verifies that the number of employee, your payroll tax filing, your state income tax, your payroll and employment insurance filings, so that you have the backup for the state costs that you have. And then tracking your FTE employee calculation each period is important. And then they'll probably ask for the canceled checks and things that show that the actual money came out of the bank account for what you're talking about. Before I move on, Kevin, I'm sure you have a question.
I was just going to reemphasize, just like we did before, it's a document, document, document to make sure you get your loan forgiven. And, a lot of the people, Impact and the ironworkers deal with large, sophisticated contractors and small, less sophisticated contractors. And the smaller you get, the more onerous that becomes. But clearly, you want this loan forgiven, so you got to take the extra step to make this happen.
Yeah, look, I can tell you that one of the things that we as a company are going to be doing so much in the coming days is just managing this reporting facility and understanding what is forgivable, what isn't. What you're going to hear, it's already coming out in the news cycle, is that there's a big fear in the business community that the expectation of forgiveness was 100% when everybody applied, and that many aren't going to see that level of forgiveness. What this comes down to is the ability to really cross the T's, dot the I's, understand what is allowable, unallowable, understand what they're going to expect from you. Understand that, the SBA already came out and said, we are going to audit every loan over 2 million, and we're going to do spot audits downstream as well. So this is the time not to be loosey-goosey with your financial information, and the time to really cross those T's and dot those I's. One of the main questions that I have remaining, this first one I've always questioned, but I'm going to go to the intent. I don't believe the intent was to limit it, but are employee federal withholding taxes forgivable? We all know that in our paycheck, there's a portion of our paycheck that is withheld, our gross pay, and paid to the government on our behalf for taxes. Very early on, I saw a stipulation that said payroll costs did not include basically your federal withholding and your Social Security and Medicare withholding from February 15th to June 30th. Then guidance came out that said that in calculating your PPP, multiply your gross payroll by 2.5, which meant disregard that statement. It's bugged me ever since, and I've always been scared that there was going to be a component in which this federal withholding and FICA component was actually not going to be forgivable, putting an additional amount of unforgiveness that nobody expected. This is something I'm just keeping my eye on. I have no indication at this point that it would in fact be like that, but I'd rather be cautiously optimistic that I'm wrong, that to even worry about it, than to be completely surprised at the end of it.
Can you look at your crystal ball and tell us when you think there might be a determination on this so that we can relay that information to our contractors and local unions?
Well, so the first monies were deposited to people somewhere in that week of April 15th. So if we sit there and say, and I didn't do the math, so I had to pull up a calendar. If we sat there and said that the 8-week runoff for those companies is going to be somewhere in early June, there's going to have to be guidelines coming out that really stipulate what the forgiveness process is going to be sometime here in mid-May to late May would be my guess. How do we operate? How do we even know what to do without having the appropriate guidelines? And that's what's so interesting about this. And I that's why I believe that even though I'm being cautious here, I don't believe that's actually going to be a thing. But I want owners, I want businesses to plan around this, and just in case, and that way they don't raise their hand and go, what do I do with this? I can't, I didn't know. The other question is, should certain companies have taken the PPP? What does necessary mean in the definition from the SBA? It was interesting. First off, I don't think that I would assume that almost everybody on this phone call fits my idea of a very small business. And when I say very small business, 10 million and under, 15 million and under, and that they're privately held. And when the SBA really talked about the forgiveness, the necessity component, they were really upset that publicly traded companies had got money, that companies that were backed by private equity and hedge funds were getting money, that companies that had large cash reserves were getting money. And that's what the issue really was. And then there's this whole idea of the Constitution and the fact that it's a very gray area. And my joke, I was talking to Pat Carroll yesterday, and I said, I'm not rich enough to argue the Constitution. So we're taking the component that we have clients that are wholly owned subsidiaries of publicly traded companies. We're telling them to talk to their lawyers. If you're a smaller business that don't have the cash reserves, I think you have every right to be in the PPP. I wouldn't get overly concerned, but do not take my word for it. If you are worried or concerned, talk to your legal counsel. And then, are those expenses for the 8-week period based on a cash or accrual? It is not completely determined yet. My safest bet would be if you file as a cash basis filer, assume you're going to do it on a cash. And if you file on an accrual basis, be able to do it at both. There's too many small businesses that don't have the wherewithal or even maintain their financials on an accrual basis for that to be the way it's done. Always, Impact is really trying to support to the best of their ability all the needs of the ironworking companies. We have, as a company, as a group, as a support function of them, we're happy to provide guidance across all the subjects that we've given webinars, plus some. And I don't know if I've mentioned this before, but we are working with ironworker companies on multiple arenas, not just in the PPP. And we want to support this group. I think it's wonderful that 70% of employment is still happening, and we want to maintain that because we all have to get out of this from an economic standpoint together.
Okay, Matt. We'll go to the questions. They are bountiful and adding up. We got about 31 questions right now. Do you feel like you adequately answered the questions that were posed and the registration process?
I think I answered most of them, but you know, I could have missed one or two.
Oh, okay, good. Okay, like I said, we got about 30. Oh, they're piling in. So I'm just going to go through these as I read them and make as much sense as humanly possible. And the first one is, does the PPP cover all union benefits paid by the employer? And we heard that in the opening one, but go ahead.
That is our opinion. Everything right now is an opinion, but when we talked about the gross payroll costs, when the original guidelines came, it talked about retirement, talked about all of the different components. So I don't see why it wouldn't be.
I agree with you there based on everything I've read. Okay, the next one is, when does the 8-week period start? Is that flexible? If we received a check on Thursday afternoon, would it be the following Monday?
So the guidelines as they stand right now say that your 8-week period starts the day or the moment that you receive the funds, not waiting until Monday. It's that Thursday that you received it. Like I said, though, the AICPA is lobbying very, very hard for that to be changed. So I think that there's a good chance that is amended.
Okay.
And I should say, they're asking for it to be amended in a lot of different circumstances. So they believe it should start on the beginning of the week, not in the middle of the week. They believe it should start when certain industries reopen. So we should wait and see what happens there, but be prepared that it's going to be starting the day you receive the funds.
So that's an answer saying that we're going to have another webinar to sort out some of the more interpretations. So stand by, Matt, and everybody else. Here's another question. Do you have to spend 75% on payroll to forgiveness? If you spent 70%, do you get nothing?
No. So it's a sliding scale. It just says that 75% of the forgiveness that you will receive have to be payroll tax. So if your payroll tax has to be 75%, which will reduce how much rent that you would have. Now, it's interesting. There's been lobbying happening right now. I do not think this lobbying will go through, but there's lobbying going right now that's asking for a quote unquote fair split of 50-50 payroll cost and non-payroll. I doubt that happens because if I go back to my statement of intent, the intent was to keep people employed, not to pay rent.
Okay. Can you discuss what is the criteria for giving the PPP loan for self-employed people?
So I have spent the majority of my time focused primarily on uh, business that employed a group of employees. So I am not the expert here. However, my understanding, as it was a couple weeks ago, is that for self-employed people that had a Schedule C, that your line 31, which is your net income per your Schedule C, divided by 12, multiplied by 2.5 was your loan amount. The guidelines of forgiveness seem so much simpler for a sole proprietor because all they're doing is keeping you afloat from that perspective. Now, what I don't know about and what gets interesting is what about the sole proprietors that maintain revenue and things of that nature and what's the look back. I don't have a clear picture. I'm happy to take questions on that offline and to at least put people in touch with more knowledgeable individuals than myself.
Okay. Is the workman's comp premium an allowable expense? Can we make a payment for the entire year and all of that to be considered an expense for the 8-week period? So there's two questions there.
Well, one is that workers' comp, to my knowledge, is not included in the forgiveness component.
Your premium is not allowable. Okay.
Nothing that I've read has spoken to workers' comp. If somebody is seen differently, please let me know. Now, there could be some interesting things where if I hired somebody back, I'm an iron worker, because my workers' comp premiums were so much, and they weren't going out in the field, I might reclass them in workers' comp to a clerical staff person, so I wasn't paying such a high portion of it. However, if they're working in the field, I would not do that.
Right.
The second part of the question, which I want to answer more broadly, is there's a lot of fraud and there's a lot of focus on that fraud. I would be very diligent to do things completely above board. So take salary. People have asked me about bonuses and things of that nature. And I've said, look, they're going to want to see that the annualized salary. So if I paid somebody in that 8-week period and I paid them $20,000, that annualized salary is $120,000, give or take. That $20,000 is non-forgivable. There's going to be lookbacks. People have asked about, what about prepaying rent? And I've said, look, my belief is that there's going to be an ability to audit. And if you try to get cute, you're going to find yourself in a bigger harm than you had. So I look at the 8-week period as a 2-month period. I would take 2 months of rent. I would take, the payroll costs that I incurred, things of that nature. I would not get cute with it.
This question is speculative in nature, but we were chatting before we got on live here, and I think maybe you could weigh in here, Matt, very intelligently. How is the C-19 going to affect the construction industry at large long term?
That is an interesting conversation, and one I'd love to talk to you, Kevin, about maybe doing a focused presentation on, because there's so many moving parts to it. What I can say is that I believe that the pandemic is built into two things. I'm not going to say it right. Pat always says it a really good way, in which the pandemic is not going to be as bad as the fear, and the fear is going to be its own pandemic. And I think that there's going to be quite a bit of economic fallout long term that goes into this. But I'll take this offline with Kevin, and if it makes sense for us to do a webinar directly around how Pat, Kevin, and I sort of do a panel discussion on what the long-term impacts from a global economy perspective can play on smaller players in construction in general. I think that'd be a great topic.
This from one of our good contractors out of the Washington, Baltimore area. What is covered under transportation? What is the definition? What is covered under transportation?
I don't know. I send that through the CARES Act email. I will do the research and I'll get back to you.
Yeah. Tom, if you would just send that a more defined question to careact at impact-net.org, and we'll get back to you as fast as possible. Is diesel fuel for cranes, lift trucks, etc., considered a utility and therefore forgiven?
Not my opinion. I believe utilities are what are really defined as utilities. Electricity, water, your office utilities.
Okay. This is how do I get a copy of the slideshow? Obviously, we're going to upload this after this webcast complete. We'll have the entire recording and the PowerPoint, right, Matt? You're going to share that with us for download off of the.
You have a copy, but I need to send you an updated one with a couple edits I made.
Great, fabulous. So, impact-net.org, and it'll be right on the front page, Ben. Okay, if they do change the current 8-week period to something else, as just mentioned, would that be an alternate option? We have been making decisions and keeping employees on our payroll now since we are currently in our 8-week period. If they change, it would be a real problem for us.
Because the guidelines, I mean, this is technically an opinion, but I feel very confident in this. The SBA, I'm going to take this back to something else. The SBA stated that anybody that applied and received money prior to new guidelines that were not subject to the old guidelines. So my answer to you is going to be simple. I believe that because you're already in it and you're already following it, there's no way that they would change it on you. I think if they do change the 8-week period, it's going to be an optional change, and it may even be industry specific.
Okay. Can you give your employees a temporary raise for being essential workers?
Yes, but don't look at that as a way to get more forgiveness.
Okay. What about flight costs? If we have to fly an employee in or out of to the job site, is that flight cost covered under the PPP as employee retainment cost?
I've seen nothing that that would say yes, that would make that a part of the PPP. Remember, I know everybody's looking at the different things for the PPP, but I talk about intent all the time. Intent here is, remember, they're trying to make sure that as many people stay employed as they can. Now, I'll take a second. I'll talk a little bit about the bigger picture here. Each state has an unemployment fund, and those unemployment funds have a finite amount of money, and then the money dries up. What was really obvious as more and more unemployment claims happened was that these funds were going to run out very quickly. PPP, as much as a stabilizer for the business community, was a stabilizer, in my opinion, to avoid a extra or a onslaught on unemployment coffers of each state. And each state is not made equal when it comes to their funds. And so it goes back to the intent. I believe this was really focused on how do you retain that employee base. And I don't see things like flights or gas or things of that nature as the intent of the law.
Okay. Spirit and intent. If the amount, hold on, there's one ahead of that one. What is the process for forgiveness if you did have the cash available to meet the expenses and you still have the cost to show the forgiveness?
So this goes back to that, was the loan necessary or not? And I'm going to say that if you're a small business and you didn't have the cash reserves to cover yourself, and you can forecast a potential reduction based on the future economy, which I think is very reasonable, that you have every right to the PPP. Now, this is my opinion, and you're in a situation in which you're better off than a lot of small businesses. And if you are concerned at all, you should talk to a attorney. But There is nothing from the forgiveness side of it. This goes into the necessity of getting a loan in the first place. There's nothing from the forgiveness side of it that would make it non-forgivable. The only thing that would happen is that you would be deemed as you shouldn't have gotten it in the first place, and therefore you would have to pay it back.
And again, the CARE Act at impact-net, or, we have Matt as a subject expert. We have we have legal counsel. We have insurance and bonding and things of that nature. So feel free to, any key business question, whether you're a local union training center or a contractor, by all means, avail yourself of that service. Next question is, if the amount, I'm just going to read it verbatim. If the amount deductions covered in forgiveness are not deductible for tax purposes, doesn't that make the loan forgiveness technically taxable by reduces expenses instead of adding it to revenues?
It's an interesting, it's a very good question. And it's funny. And the reason I laugh is because you hit it on the head. Even though when you convert the grant over, or the loan over to a grant that's not technically taxable income, but you're removing the expense, you're basically making it taxable. But let's all be honest here. I'll pay tax on given money, if you want to put it that way. And if you lost the revenue that it's replacing and therefore couldn't have paid your employees, you're not going to have income technically to be taxable anyway. So I don't want people to get too caught up in that. It's too much of a topic that people talk about and say, oh, it's not really tax free. If you go back to intent, if I'm an employer that got shut down and I went to 20% of my original revenue, and then I use the PPP to bring back employees, even if I didn't use those expenses to deduct for tax purposes, I'm probably not going to have taxable income at the end of the year anyway.
If an employee quits due to fear of the virus during your 8-week period, will that reduce your loan forgiveness?
That's an interesting question. And I was reading up on the whole thing about if somebody goes on unemployment, you offer the job and they decline it. My argument being, I'd want to do just slightly more research on it, but I would argue that you give them the offer letter, they reject that offer letter, and you have that documented, that would alleviate the loan forgiveness reduction.
Good answer. I have heard you can use equipment leases for part of the lease forgiveness. Is that correct?
I think I heard the same thing. I would want to double check it because there was also the idea of lease, equipment leases that were actually really equipment financing and the interest on those being part of it, which I know completely that if you're paying interest on a financed lease, that is covered. I'm not so sure that the full amount of a actual lease, like a rental, would be the same thing. And it depends. People use different words in different ways. I've seen companies in the ironworking realm that rent all of their heavy equipment for job specific purposes, ones that own and therefore finance, and ones that lease with a give back. So I'd want to be a little bit more specific on answering that question.
Okay. If you offer them their job back and they refuse to return, technically they would be deemed to have quit at that time and would be unable to continue to receive unemployment, correct?
They really loosen the unemployment rules. Just like they've allowed 1099s to apply for unemployment. I would not make that assumption because they've already given the guidance that we can document the fact that they refuse to have it. A lot of these people were already on unemployment. So I know where you're going. I think right now in the leniency of that they've been given, that's not the case.
You'd probably let it fly. Yeah. Right. But that could vary state by state, could it not? Yeah.
Now, remember the federal government, there's not only the state unemployment component, the federal government added another $600 per week, which is what made this all a little bit more complicated, because that turned the unemployment into a $52,000 a year value to somebody. So somebody that was making $15 is going, I'll take $52,000 a year over $32,000 all day long.
A good friend of mine from the great state of Michigan says, can we have a copy of the reference spreadsheet you spoke about, man?
Yes.
Okay.
What I want,
Load it on the website.
I prefer that people get it from
Care.
us directly because
Okay.
there is a usability component to it. There's a lot of, I didn't lock it down. There is formulas in it, and it's probably best to sort of have a quick dialogue about it.
So email the care act at impact-net.org and we'll get it straight to you. So Brian, if you do that, we'll make that happen. Okay. What happens if an FTE or FTEs leave on their own accord, hence reducing the company's FTE headcount? Can the forgivable portion of the loan be reduced for that instance? Hold on a second. Also, can the company make up for those lost wages by increasing other FTE's salary during the 8-week period in order to maximize the forgiveness amount?
So this is kind of a multiple. Hold on.
It's a basically
Sorry,
full-time employee.
If they
And they
refuse
want
to come back, I would make sure it was documented, because if it's documented, you can use that as part of your non-loan forgiveness. But let's ask this question in a different way. You asked something very interesting, and I want everybody to be very careful. There's two components of the reduction. One is your compensation, and one is your FTE headcount. Well, by increasing salaries of other people isn't going to change your FTE, and it's a percentage. So for simplicity, if I have 10 FTE, one leaves, I have 9, that's a 10% reduction. That is going to have a 10% reduction in your loan forgiveness, period. That's it. That's the formula. So now what you've done is if you increase the salary for other people, but you still have a full 10% reduction, you could actually be costing yourself more money by throwing more money at other people. And remember that your compensation, your maintenance and compensation is actually looked on a per employee basis. What I will do real quick, before this is all said and done, I will actually just quickly show the spreadsheet that I have and some of the things that we made assumptions on in tracking it.
Okay. The next question is what web address to view this recording. It's www.impact, impact net.org. So impact-net.org, right on the front page. You'll see this webinar and our other webinars as well. The next question. What if we had to let someone go, but it had nothing to do with COVID-19?
So it's not a one-to-one ratio of staff, the way I look at it. So there's normal business processes. You may have an employee that is not living up to your expectation or to the job expectation, and you want to let them go, and you're going to bring somebody else in to replace them. I see no issue with that.
Good. I've heard that moving the money out of the account it was deposited in wasn't allowed. Is this true?
Huh? I'd have to look into that.
Okay.
All I know is that what I've been telling people and what I've been reading is that you want a segregated account. You want to show the money in and out. And most people do not have the opportunity to open up a new account to completely segregate it. I wouldn't move it out of your bank, and that may be what you're talking about, because your bank is a lender, and by taking those loan funds and moving from that bank to another bank is probably goes against all the covenants. I don't see why a separate account that you're using to manage the loan would be an issue, but I should look into that.
Email careact@impact-net.org and we'll get it to Matt, and he'll follow up with you directly. Can the owner be paid from the PPP funds? I have a small subcontracting business and only have been paying myself $200 a month. Or is this only for the guys working in the field?
Interesting question and a little bit convoluted. I'm going to answer the simplest of it is yes, a business owner's salary is completely acceptable under the PPP. Now, it gets a little bit more complicated in the type of entity you are. If you're in a sole proprietor or LLC on a Schedule C, then you're not actually paying yourself on a W-2. And if you applied for the PPP, it should have had a look back period to your W-2s and you weren't included. So then you're discluded from this. So there's some very specific things around that. But in general, up to 100,000 owner salary is completely fine as long as it was there in your look back period.
Can you prepay payroll?
This goes back to, staying above water. I'm assuming what the question is can I prepay payroll to get more into it in a certain period? I would not do that. You're going to annualize. The test that I'd be looking at is an annualized test. So if I pay somebody in that 8-week period, what's that annualization? And then what was that same position the previous year?
Okay. Does the 8-week period start the day you receive the funding or the first full week after receiving it? Talked about that earlier.
We discussed that. Again, right now the guidance is the day you received it.
Okay. Let me go on. Does FTE include ironworkers subject to master labor agreements?
I don't see why it wouldn't.
Yeah, I gotta believe it does.
FTE is, I'm sure most of you know this, but just in case, full-time equivalent. And it's looking at saying, anybody on salary that's doing 30 plus hours is a FTE is equal 1. But if you have part-time people, we do a test about 30 hours per week equivalency for one head count.
Federal withholding taxes are part of the gross payroll amount, meaning you have to add it back to the net in order to calculate the gross wages.
Yes, but if you go into, I assume you have a payroll company, whether it's ADP, Paychecks, something more local, Paylocity, one of these, you should be able to get reports directly on your gross salaries and not have to do any type of calculation. I would do that just to avoid any type of error.
Okay. The next question is, we are privately held but have sales of 50 million. Do you have an issue, or do we have an issue as a result of getting a PPP loan?
There's a lot of things that determine it. I would talk to your general counsel or your attorney. Just because you're 50 million doesn't mean that, let's go here. If you're 50 million, maybe you have 40 million of actual costs. And so you're talking about something in the range of 3 million, 3.2 million in monthly costs. If you don't have at least a month's of reserve cash or 3 months of reserve cash, I would question whether you're viable if the economy went down. You have to make an argument that makes sense. You have to make an argument that you believe is defendable, and I would want my attorney to back up that decision. 50 million still keeps you in the small business realm, and you're privately held. And many businesses, even your size, do not have the reserves they need to sustain for a long shutdown.
How long after 6/30, June 30th, do we need to maintain a full FHE count?
FTE is probably what.
FTE. Right.
My understanding is that they're only looking at the actual 8-week period, but I've had the same question from a guidance standpoint, and I have not been able to find the answer to see if they're going to extend that look back period through December.
Okay.
But I think that'd be very difficult because the economy is just so unknown. I really do think they're going to look at it for that 8-week period.
What is the likelihood that the PPP or some similar rescue package for small businesses will be extended or renewed? I ask because our revenue right now has not taken a hit yet in March or really in April. What about months going forward and being able to keep employees working due to lower demand from customers? I'm thinking 3 to 6 months down the road as the economy slows more, as it seems most economists are predicting.
Yeah. Well, this goes back to the previous question as $50 million firm, because many businesses don't need the PPP funds right now, but any prudent business owner understands that we're looking at a potentially bear market and how that impacts overall spending and therefore construction. I mean, we all remember what happened in the construction industry in 2008, 2009. And that's where having these PPP funds now is important. And quite frankly, you know, if you have the revenue staying right now, I would put together documentation for the PPP, but I would sock that money away so that you have that 2-month period, 2.5-month period of expenses to keep the doors open and not greatly affect. I shouldn't say not greatly affect, not put you out of business.
After the 8-week period is over, what is the process and length for a loan to be forgiven?
So my understanding is that you have 60 days to apply and then 60 days for you to get the answer.
Okay.
I think that answers the question.
So it could be multiple months
Before
until you
know if
really
it's
get the.
forgiven or not. Yeah.
Just for the benefit, just to drive this point home, how do you calculate FTE?
So for your 8-week period, I do it on a weekly basis, 30 hours. I divide the number of hours of part-time people that were worked, divide that by 30, get your head count throughout the whole period.
Okay. And you spoke to this earlier again, is workers' compensation insurance covered?
I've not seen anything that would indicate that it's covered.
Okay, great. If a company decides not to use the PPP loan, have they come out with directions on how it is to be repaid?
Yes. You go to your bank and your bank will send it on back to the SBA.
Okay.
You talk to your bank.
It says, sorry, what's the definition of transportation costs?
Again, I don't have a good handle on that right now, and be happy to do research and follow up with anybody that wants more guidelines there.
Okay. What's included in the utilities expense? Example, gas, electric, phone, internet, water, cell phone, pagers.
Generally, true utilities are gas service, not filling up your tank for your cars or your equipment. Your electricity, water, things of that nature. I tend to stay on the more conservative approach to that. So cell phones seem to be crossing that line to me.
This is from one of our training centers. If you receive a $100,000 loan and use $85,000 on payroll and utilities, will the whole $100,000 be forgiven?
So the question is saying if you use 85,000 in your total use
of the 100, yeah. You get a $100,000 loan, use $85,000 of it on payroll and utilities. Will the whole $100,000 be forgiven?
I can't answer that. And I'll tell you why I can't answer that, because I don't know what the breakdown between payroll and utilities were for that 85,000. And therefore, and I don't know whether the FTE count was maintained. And because technically, let's say that your 85,000, 80,000 was payroll, 5,000 was utility. We're okay there from a percentage perspective. That 80,000 was because 80,000 was for payroll, and you got 100,000, so there's not less than a 25% reduction. There may be argument that yes, it's fully forgiven, but then there's all these other components that could get into it that makes it not fully forgiven. So,
It's a gray area.
well, it's very individual. You got to look at each individual company and understand what the basis of their loan was calculated on and what's going on currently during the forgiveness period. And that's why I wanted to do this webinar for you guys and want to talk about really the importance of understanding this and documenting it, because this is going to be more complicated than the loan process was, if you can imagine that.
I can imagine that. What are considered transportation costs? Can we use gas costs on our work vehicles?
I'm trying to look up right now the transportation because it's coming up enough that I want to be able to answer it, but I don't want to give wrong information. So I would continue. Another question I'd like to take offline just to make sure I don't guide.
Yeah, sure. And again, if Matt doesn't answer it entirely, careact@impact-net.org, and we'll get to you. Trust me. Are the employer-paid portion of the union benefits, health and welfare, pension, annuity eligible for forgiveness as payroll costs?
Most of them will be. There may be some if it's stripped out, may not be, but I would say a yes.
Is rent just premises rent, or can it include rental lease on equipment?
My understanding is it's premises rent.
Yeah. Following the 8-week forgiveness period, are there conditions on how any remaining portion of the loan can be spent? Will similar backup documentation be required for the remainder of the loan?
So I'm going to take this question as if only part of the loan was forgiven, and you have a portion of it that becomes an actual loan in that 2-year 1% component. And then what you're allowed to use spending. And my understanding is that it's very wide open. Now,
Okay.
my understanding is that you can't refinance other debt that you incurred prior to the pandemic. But there's because you're paying the loan back, I don't think there's any limitation except for things that are obviously unallowable. I think you'd probably not be in a good place if you went and bought a boat.
Okay, when trying to review and compare the amount of payroll costs, is it not a cumulative amount that we are trying to attain by the end of the 8-week period? Given that our business is busier summer months, we are going to have higher than normal payroll regardless.
So this goes back to the seasonal employer component. So you can actually take your look back period and you can put it to a different time period based on that seasonality. However, you're in a pretty good position though if you take a look back period in which you have a lesser amount of payroll and head count as your look back period for this current period, because then you don't have to worry too much about that forgiveness. So again, there is a strategic component to how you manage all this, and there's a lot of moving parts. And this is why, those firms that have CFOs and accounting departments in-house that have high-level people are going to be well served by those high-level people, and the ones that don't really should be engaging third-party providers to help them through this, because it is complex. Look, I read on this stuff almost every day, and there's a lot of things that are still unknown to me. And I try to continue to educate myself and talk to other people that are keeping abreast of the information.
This may be a repeat, but it might not be. It's two-part question. Can the owner be paid from the PPP funds? I only have been paying myself $200 a month prior to this, or is this only for the people I employ? And the second part is, as an anticipatory move, I started paying PPP to my crew the week before I received the loan.
So yes, the owner can be paid from the PPP funds, assuming that the owner is on payroll, is not a pass-through entity. Paying your employees prior to receiving it, you're not going to be able to change your 8-week period based on that. So that was probably a little bit of a premature action.
Here's a good one. What's a fair amount of cost charged by accountants for preparation of the documents needed for PPP loans?
Well, when our firm does it, we do it in the normal process and engagement of a client, meaning that we're helping with their ongoing accounting needs. This is not from the tax side or the succession exit planning, but from the outsourced accounting where we do bookkeeping, controller, CFO services. And it would be built right into our process in which we track it through, like I mentioned, I'm using job costing, though it's not exactly how we would do it. And it shouldn't be very much more work or need. What would be fair if you were to engage somebody just to handle this is an interesting question. It depends on who you engage. If you can't engage your tax accountant, it could be a little bit more than engaging a firm like myself, just because of the nature of the model of the business. But it's going to be very dependent on the size of the loan that you receive, the number of staff that you're maintaining, the seasonality of your business. I can't really give you a good example, except for if you have a company that supports you currently and understands you and works within your accounting system, they should be able to do it fairly inexpensively. I don't want to use the word cheap. It's not going to be cheap, but it should be reasonable.
If your 8-week period is part of April, all of May, and part of June, which months do you choose to use for premiums?
I assume we're talking, I can only make assumption on what you mean by premiums, but I'll put it this way. Most premiums are paid on a monthly basis. The 8 weeks is a 2-month period. I would just do 2 months. And it's just based on when you pay that stuff. So if you paid in the beginning of April in this example, that wasn't on a cash basis when you had the funds, but May and June were. It should cross, if you were consistently on a date that you pay, it should cross over that 2-month barrier each time. I have clients that are weekly, on weekly pay period, bi-weekly pay period, semi-monthly and monthly. And each one, we had a equal number of pay periods to work with.
Is a full-time worker 30 hours or 40 hours per week?
We always base it on the 30-hour component. Now, usually a 40-hour worker typically isn't hourly, their salary, and that's one person. So when I talk about calculating your FTE, is take your salary workers, put them over here, and call it 1 per, and then take your part-time workers, typically people that are under 30 hours per week, and you use that 30-hour notation. I think I mentioned this in other webinars here, but the reason we use that 30 is that it goes back to some of the HR rules and of benefits that says that if somebody works for 30 or more hours, that they should be qualified for certain types of benefits.
Okay. Would 100% of the fringe package be included in wage calculation, or do we need to carve out the health and welfare and pension? We addressed that. It should be part of the calculation.
Well, I think they're asking a very good question here, is whether we need to carve out specifically health, welfare, and pension, or if it's the entirety. This is the gray area. I'll give you an example. I decided not to include, I'm not obviously union, not to include in my original loan calculation things like company paid life, long-term, short-term disability, and things of that nature. But I did include the health, dental, and so forth, and retirement. So there may be, and when I have the opportunity to deal with banks that start doing this, I'm a better clarity. It may just be carving out that health, welfare, and pension.
Okay. Are the wages of part-time employees forgiven? Not, if you have all part-time employees, should you even apply for the PPP?
So, yes, part-time employees count. Yes, you should apply. We're getting very close to funds running out. So if you haven't applied, get it in. But there's nothing that eliminates you because of part-time employees. And that's the whole thing of calculating the FTE based on part-time employees, having a look-back period for wages and so forth.
Apply, apply, apply. Is there a deadline to apply for loan forgiveness?
My understanding is that you have to apply within 60 days after your 8-week period ends.
How can I receive a copy of the forgiveness worksheet that was mentioned? Again, Carrie, if you would email careact@impact-net.org. Matt will work with you one-on-one on that particular point. Are sewer payments utilities?
No, and so I look at things like sewer payments and some of the things that you asked about as project-related costs. And again, the intent of this is not to cover your project-related costs. So again, I would really look at this as the intent of maintaining operations of your business from a core component. One of the reasons I believe that rent and utilities were even added into this, and this goes back to a higher level conversation, is there was reports that in April, 26% of renters didn't pay their rent. That's commercial and residential. That in May, we're running into the same type of issue. Now mortgages are starting to happen. And if we go back to the intent, we're trying to keep people employed so that they can pay their bills. We're trying to avoid things like the 2008 crisis. Remember, that was a housing crisis that was credit associated, meaning that the ability to get credit was diminished. Well, this isn't a credit crisis. This is a liquidity crisis. So if we go back to intent, what are they trying to do? They're trying to make sure that some of the biggest organizations and infrastructure of our economy don't get affected. Well, your base stuff like your Pepcos, your BG&Es, they're infrastructure related. Your rent, so the financial system is infrastructure related. That's at least my opinion.
Okay. The next question is, it's a long one. I've read a couple of articles that loans can be forgiven proportional and up to 100%. You need to meet 2 criteria, which are full-time equivalent and payroll. How do you determine FTEs? For the FTE forgiveness, do you compare the FTE of the 8-week period for the loan to 3 time frames? T1 is February 15, 2019 to June 30, 2019. T2 is March 1, 2019 to June 30, 2019. And T3 is January 1, 2020 to February 28, 2020. Then take 8-week loan period divided by T1, T2, T3. And if these time frames are above 1, then the loan is forgiven. Is this correct?
Offline answer is, I think you're making it more complicated than you need to. I believe you choose your look back period. So you don't need the T1 and the T2 periods. You pick one of the two, and then you compare that to your T3 period. Well, not even the T3, not even T3. Reach out to us. I think you're overcomplicating it.
careact@impact-net.org. The next question. When comparing FTE from 215 as the prior starting point, do we have to be at the same FTE at week 8 or for each of the weeks from funding date?
My understanding is that it's going to be a period look back. So we're going to take the full 8-week period and we're going to find what your FTE calculation is for that 8-week period, not individual weeks. We'll track it that way internally, just so that we can plan appropriately. But when we report back, it'll be for that 8-week period, and the comparative period will be the same. I mean, actually, we did the FTE calculation on the full year of 2019.
Okay. Can you pay an additional 401k contribution? Is this part of the $100,000 annualization?
Again, I don't want people to get cute, but the 401k contribution is a separate item than your payroll. And your max of $100,000 is gross payroll and is irrespective of the 401k. Now, I think this is a really good question, because a question comes up is, if I have an employee, that is making $200,000, I have to limit his salary to $100,000 for PPP. All good, fine. But on the 401k, let's say I have a safe harbor 401k and I'm doing a 4% contribution. Well, 4% contribution on 100,000 is 4K, but on the 200,000 is 8K. That 8K is actually allowable based on the guidelines that we have at this point.
Interesting.
You guys are making me do math on the fly, which is always scary.
Are rental storage containers a claimable expense under the rent category?
Again, intent. Those storage containers are usually job specific, job costs. It's part of what you're getting paid for. I go no. I go no all day long, and I would stick to the letter of the intent of the law, I should say.
Did you say that all employers' portion of union fringes are forgivable with the, I think within the 8-week period, with the 8-week period?
I did not. I love the question before because it really, it's been about carving out that health and welfare portion and pension portion. And I feel very confident about that. Do I believe that all fringe benefits that are given through a union, I think there would be, I do believe there will be a carve out component to it.
Yeah. A new requirement is to have a COVID representative for each job to make sure all PPP requirements are being met. Can we use the COVID training costs for the PPP loan?
I was not aware that that you needed a COVID representative for each job.
I wonder if that's a general contractor requirement.
I'm also wondering if you were able to do a change order for having that COVID representative.
Good question too. The plot thickens.
And can we use a COVID training cost for the PPP loan? Remember, if the training costs are employees then that are given the training because they went and got trained, I'd love to talk to Tammy separately because I think it's a very good question, and there's some different things going on here that would be very interesting to understand.
Tammy, again, CARE Act at impact-net.org, and we'll get that directly to Matt. The next question. If the intent is for us to keep everyone employed and all of the union benefits are included, why would other payroll costs be excluded?
If the intent is for us to keep everyone employed and all of the included, why would other payroll costs be excluded? Well, the other payroll costs that are excluded, first and foremost, are the employer FICA, like Social Security and Medicare match. You're asking me for kind of that why. My opinion is that if you look at the Senate and everything else, they're looking at what the entire budget of this is going to look like and maintaining it, maintaining some sort of realm of control over that. And also understanding the implications of how if the government's covering taxes that are paying the government back later and the downstream of those taxes being part of the individual tax return, there's all these kind of like convoluted dominoes that happen as you're doing that. And that's why there's an overall question. I hope that kind of answers it, but it was a little bit vague. I'm sorry.
Other payroll costs, workers' compensation, general liability, employer FICA.
No. So as we mentioned, employer FICA is not included in your payroll costs. It's only your gross salary. That's employer costs. Workers' comp we talked about, insurance we talked about. So
back to the necessary aspect. If you took the PPP to keep guys working rather than laying them off, even if you do enough reserves, not knowing what the future is going to hold for the industry, would that be acceptable?
If I was making the law, yes. But this is the gray area, and everybody's asking the question right now ever since Wednesday of last week they came up with this because it is so vague. There's a great article that Forbes put out recently that sort of went into this, and the one thing is I think it's going to be very hard for them to criminally charge anybody for any of this. I think if we go back to the intent, they're trying to crack down on the very large businesses. What I would say is if you have gotten a loan that's more than $2 million, They're going to audit it. They've already said they'll audit every single one of those. Those ones, if I got a loan of more than of $2 million or more, I would have a legal representative give me their opinion, and I'd follow that opinion. Because once they give you the opinion, then they gotta support the opinion at the end of the day.
Right. Great webinar. Questions were answered fully. This is just a comment. The topic of COVID-19's impact on the future construction and economy would be very helpful. And of course, we'll make arrangements to make that happen for everybody who's still on. Since wages are over $100,000 were excluded on the application process, is there any information available on how we are to handle this for the loan forgiveness process? Some employees may go over $100,000 per year by year end. However, may not occur during the 8-week period.
Don't worry about that, because the 8-week period, we're going to look at an annualization mechanism. So if during that 8-week period, their annualized value of that salary is not over 100,000, it's not going to be a big deal. We all understand that you have employees that, and you may work more later. I don't worry about that.
Again, I think this was answered already, but does the rent for a job site trailer count toward your PPP forgiveness? What about job site office trailer rent?
Again, I go back to intent. I've not seen anything that specified this, but when you talk about job site trailers, those are built into your bids, and you are paid for them through the contract, and that would seem like double dipping in my book.
The converse of that is if that's the company's home.
If you have a trailer on a piece of land and that's where your actual admin staff, and it's not a job site trailer, which was specific in this question, then I consider that rent for the company. And I know contractors that approach it that way, and I don't have a problem with that.
There are contractors that remain in the same facility for decades, so that's a possibility. To be clear, the interest on a loan for a piece of equipment, not just mortgage interest, can be used for forgiveness?
I think I would want to clarify that, because there's a lot of talk about just mortgage interest. I had seen other guidelines early on in the process regarding loan interest as well. Now, to be fair, trying to keep the information around both how the EIDL factors and this factors and all the different rules, and sometimes it's getting a little bit murky for me. So I'd want to rubber stamp that answer for you.
I'm confused. If someone quits, but we as an employer still needs the manpower to work, we would just bring on another worker. Wouldn't that still qualify for use and the labor cost calculation?
Yes. However, you have companies that had to lay off 50% of their staff, got the PPP, and are going to rehire them during that 8-week period. Again, get them off unemployment. Put the burden on the federal government as opposed to the state government. And some of those people will turn it down, and that's where loan forgiveness would not, or loan forgiveness reduction would not come into play. In your circumstance, yes, go hire the next person. They are factored into it.
What happens when you maintain your head count but hire and lay off employees according to the need of the main job? Is the additional payroll for those employees above the head count forgiven also?
So you received a loan based on a previous period of wages. I'm trying to read between the lines a little bit here. If you increase your wages or increase your staff because you have current jobs, you're only able to have total forgiveness of the total loan. So you may have more payroll than you had in the previous period. What we're really trying to do is prove that you've maintained at minimum your previous level of employment and compensation. In your case, you will have proven that, and there will be no reduction to your PPP. You're never going to get additional forgiveness or additional funds because you brought on more people.
Okay. We have received the PPP. What happens at the end of this 8-week period? We are down on work and we have to lay off people after the time period covered by the loan. Are there any penalties on our forgiveness?
I don't believe so. I believe they're only looking at the 8-week period.
For the initial loan calculation, we factored in a 5% employer contribution to the 401k. We won't be paying that amount until the year is over. Does that mean we can't get any forgiveness for that?
No, I believe because the forgiveness reduction is looking at two factors, compensation and FTE, and is not requiring a proof that 401k payments are being made. And many people have that type of situation in which there's a vesting period or there's a profit share plan in place in which it's not calculated until the year end. So I don't think you have to worry about that.
How do you define the day you receive the money? Is it the day that the bank received the money or the day that the money was deposited in your account?
Money in your account.
Should you pay union benefits early if the 8-week period ends before the due date by a week?
Oh, usually you're doing those monthly. I would think that 8-week
Monthly.
period would cover the two payments. If not, I wouldn't have a problem with you paying it early because it's 2 months that you're doing, and in my mind that's acceptable. But you're not prepaying it to get additional benefit. You're just trying to follow the letter of the law.
What if you have a separate payroll account that you move the PPP money to? Will this be an issue?
I don't believe so. So I believe that, if you move the PPP money based on sort of that cadence of saying, here's the amount of payroll that I'm gonna have, but I'm going to disperse that because it's covering it. You disperse that to your payroll account. I think you're fine.
Do employees get their federal tax payments back for the 8-week period?
This is a personal tax question, and the answer is it depends, but this should not affect anybody's personal tax situation. If you go and file taxes and typically get a refund and your situation is exactly the same, that you've made the same amount and that you have the same amount of federal withholding withheld, I would expect it to be similar in result. But that's my way of giving you a non-committal answer because it's too personal.
If workers will not come back, if we give other workers additional hours, will that increase our full-time worker equivalents?
Yes. If not from an overtime perspective, well, actually an overtime perspective too, yes. But the simpler answer is yes, because you can increase hours and those hours will create a full-time equivalent in my book, but it has to be on the hourly side.
I jumped the gun and started paying my crew the week I applied, anticipating the loan being approved. Does this present a problem for me?
Well, I guess it depends if you had the revenue coming in to support them and if you're not looking to go backwards to use that as your forgiveness period. But if you brought them back and paid them to do nothing, then I think you've presented a problem for yourself.
If I get a loan on 4/20, April 20th, then the 8 weeks is over on June 20th. So isn't this my date for FTE? Or do I have until 6/30 to restore my FTE?
It's a good question. And my understanding is that's the 8-week period and it's the FTE of that 8-week period. When we talk about restoring FTE, I believe we're looking at restoring it during the 8-week period for the forgiveness.
Okay. FTE count is an average of the 8 weeks and not the number you have on the 8th week, correct? This is a problem for me as construction just opened and I'm 3 weeks in where I could not employ more people. That's an interesting question.
Yes, but in this circumstance, did you receive the PPP money already, or have you just received it recently so that your 8-week period just started? And there's also the side of this that says that technically on the intent, you should have hired those people immediately. Now, this is the argument that the AICPA is having and saying that having this arbitrary when the money comes in date is not really appropriate for a lot of businesses, because why would you bring on people to do nothing? Why would you pay people to do nothing?
The next question is ironworker fee covered? I'm not sure what that is.
The only thing I can assume is they're talking about our fee, and Impact has agreed for us to do an hour or two consultation with anybody that needs it. But outside of that, I don't know what that would be referring to.
Yeah, I don't know either, I'm afraid. You can always email careact@impact-net.org. Is a cash balance plan for your office staff part of payroll, and can you use a PPP loan to pay this if you divide the full amount by 52 and multiply it by 8?
Joe, reach out separately. I'm not really sure what you're asking there.
careact@impact-net.org. We completed a few projects just as this started, so I had a higher FTE count in the first quarter than we do now. I'm not sure if we will be eligible for relief unless we start another large project before our 8 weeks runs out. Do you agree?
I'm gonna give everybody a little hint that I'm looking at and dealing with right now. They're giving 2 potential look back periods for your FTE count. Okay. And within my slide deck, I don't have the dates off the top of my head, but if it's me, I go and I look at both of those periods and I find the period that has the less number of people, and I use that as my look back and hope that that helps resolve this. Now, I can tell you that I can see where the challenge is. It's that almost seasonality or the ebb and flow of the project. But you'll have to maintain it as best as you can from a documentation standpoint, and you may not be fully forgivable if you don't get back to the level that you were.
What are the union benefits that the PPP covers?
I can promise you it's the wealth and health care and pension at the very minimum.
What if you are a remote company and we use voice over IP phones and meeting software for meetings? Can they be considered utilities?
Not in my opinion. Just so you know, we are a completely virtual company. All of our staff work from home. We've been doing it for 10 years, and we are not considering our VOIP system as utility.
What determines if the company has the adequate sources of liquidity to support the business ongoing operation?
That's the big question. That is a big question, and the guidelines and guidance isn't there, and a lot of people are pushing for more specific guidelines from what came out on the 23rd. Interestingly enough, the SBA gave everybody till May 7th, 2 days, to return the money if you didn't need it. Well, then they said, actually, we think we need more people, give more people time to figure it out. So now it's May 14th. And that was like yesterday that they said May 14th. And I wouldn't be surprised if they extended that again, because it's just so much ambiguity to this.
How are the funds in excess of the forgiveness amount treated? For instance, loan of $3 million, forgiveness amount calculates to only $2.5 million. What happens if the $500,000 excess? It converts to a loan. What can it be used for at that point?
Let's all make sure we understand this. It is a loan right now, and it converts to, when it's forgiven, it converts to that grant approach. So it's not that it converts to a loan. $2.5 million becomes forgiven. That gets moved over off of your balance sheet. 500,000 remains. It's a 2-year 1% note, and then it can be used for pretty much all business operations.
If I'm consistently working in the field on projects for the 8 weeks following the receipt of loan proceeds, is my loan still eligible for forgiveness?
Yes.
Okay.
And I think we're
Isn't
getting
the
close to the end here, and so I'm going to try to be more short and curt with my answers.
Yeah. Is the FTE calculation measured at the end of June? If so, you are seasonal, and you have all rehired by the end of June. Are you counting FTE at the end of June or some mix or average over the 8 weeks?
I'm counting average over the 8 weeks.
Right. Is the employer matching portion of Social Security and Medicare 7.45% on
No.
top of employee payroll eligible? Not okay. Must you spend a minimum of 75% on payroll to qualify for forgiveness?
Not to qualify. You cannot get forgiven anything less than 75%.
Okay.
So your non-payroll stuff cannot be more than 25% of your forgiveness amount.
Can our accounting costs and legal costs for the program be expensed? I'm sure.
Can be, well, it's not going to be. It's not going to be part of the PPP or forgiven.
I'm sure that was the question. What's the process for changing the look back period that you just mentioned?
It's not a process. There's actually a guideline right now that says that you have two choices of your look back period for the FTE component. And so that is, I believe, in the PowerPoint. And if not, I can provide.
Can our accounting and legal construction costs be deducted from our loan amount? You just answered that.
Yeah, no.
Legal and accounting cost.
No.
Yeah. I think the fringe question, whether other benefits paid to the like training, other funds can be included in payroll costs for forgiveness and calculation.
No.
Let's see, we're getting this pops around as people ask new questions. God bless America. If have a week in which I paid my workers less than 30 hours for a week with PPP funds, will I be penalized for not paying them?
Again, we're looking at average for the entirety of the 8 week period. I wouldn't get caught up in 1 week. So don't focus yourself on a 1 week period, but we track it weekly so that you can have a running total and so forth.
Just because we have access to money, it does not mean we are going to spend it to keep employees employed who would otherwise be left.
I agree. And I think that's part of where the intent of this goes and why this ambiguity around necessity is scaring people prematurely.
This gent says he missed the first few minutes and would like to hear more on transportation. That's an issue. The transportation issue is going to have to be emailed to Matt via careact@impact-net.org. If rent is part of PPP expense for companies which own the building, the property taxes count?
My understanding is that no, and it's not that the rent. So if you own the building, it's a mortgage, and then the interest is forgivable, part of the PPP. Now you may have a circumstance in which you have a separate entity that owns a property, and then that gets rented to the operating company, and then there becomes a whole secondary conversation around that.
The money came in on 4/18, but we are not back to work until 5/4.
That's why the AICPA is pushing hard to get this period adjusted.
For FTE calculation, as 30 hours uses the denominator for part-time and 40 used for full-time.
Look, when we're doing an FTE equivalent of part-time staff, I use the 30-hour factor. 40 hours is what we all consider full-time from a 2,080 hours per year that your salaried people are typically expected to work. 30 hours is the calculation equivalent for your people that don't work that are all part-time.
So is the 8-week an average FTE count for the entire 8 weeks? Or if in the 8th week I have restored everyone, do I qualify for 100% forgiveness?
I go with the average.
Will the forgiven part of the loan, the grant, be income, or will it be treated as additional paid-in capital on your balance sheet?
No, it'll be treated as income, but not reported as income on your tax return. It is not additional paid-in capital.
My look-back period is all of 2019, which sometimes included 11 workers. My immediate look-back period, however, includes 4 people, 3 iron workers and myself as the owner. That's how many people I had working when I applied for PPP. Is that a problem?
It's not necessarily a problem, and your look-back period, I have to look at your application and then how that is correlated to what you received. In this example, I'm trying not to be too long-winded here, is that if you applied based on 11 people and got money based on 11 people, and then now you only have 3 or 4 and you only maintain 3 or 4, then what you're going to do is owe back what would account for about 50% of the loan. Not a big deal in my opinion, because what you're going to do is you're not going to spend the money associated to that additional head count, and you're going to get forgiven based on the head count you currently have. Not having the full amount of loan forgiven is not a bad thing. It's an okay thing if you plan around it and you don't spend the money and can't pay it back.
Okay. The PowerPoint you can get off our website at impact-net.org. It'll be uploaded later on tonight. Technically, I could use a loan for any cost. I don't want it to be forgiven, correct? In essence, I just got a loan for 2 years at 1%, better than any bank is currently offering. You want it forgiven, it would be free.
Yeah. Yes, I would say you always want it forgiven. It is a better loan, but most of your loans are going to be more than 2 years. 2 years is a shorter period, but that was my whole point, is that on the forgiveness side of stuff, why would you get concerned about it being a loan with that type of terms? So.
Okay, Matt, this is the last of our 90 or 107 questions. I'm seeing disputing info from various other places on the calculations for FTEs. Some guidance saying restored employees are allowed to be considered for the whole period versus having to have an average over 8 weeks. So some guidance seems to be stating you only need to measure FTE at end of June versus over 8 weeks. Any way to confirm this for sure, since it isn't matching up to your opinion earlier?
Yeah, so this is where I go back to it. There is enough ambiguity that I am giving, when it comes to this FTE things, my opinion. And I'm sorry I can't give anything better than that right now. And I think we're going to have a much better clarity here in the next 2 to 4 weeks, and probably 2 to 3 weeks, quite frankly.
Okay, well, the entire nearly 2 hours will be loaded. It's going to take some time for us to load it up on the website, but it's there. You have the resource of Impact, our subject matter experts, Matt, legal, so on and so forth. Look forward. We're going to be doing a follow-up webcast on what it takes to navigate through this construction industry going forward in the midst of the pandemic and this crisis. So Matt, on behalf of the trustees of Impact, the iron workers and their contractors, we thank you very much. I thought it was very productive. Have a great day and be well. Thank you.
Thank you very much, Kevin. Thank you, everybody. Have a great day.